Is it me, or do any of you find it interesting that we have no supply, no inventory nationally? It's still really, really bad. In other parts like San Diego, and I don't even know, I can go on the map and look, but the whole map is orange. If there's a map that I do on my KCM monthly webinar, and it's all orange. And typically it should be blue or darker blue. So the darker blue we go, the more inventory we have. The lighter blue is worse, then we get to orange, it's worse. And so we're back in the orange, we were in the blue. With that being said, I don't really understand how the government knows there's no inventory, and so their solution to solve housing problems is, hey, why don't we give you a tax credit to go buy a house? Does that make any sense to anybody? Because I don't really understand it. All we need you to do is lower the interest rates. Let's get the rates down to 6%. Reduce the spread from the 10-year to 30-year, or just start cutting rates, but get rates down to 6%. Incentivizing people to go buy houses is actually not what we need right now. We don't have a house buying problem. We actually have an inventory problem. So if you have more buyers, what you're doing is you're pushing more buyers into the market. You're going to push values up in a short period of time, and you're basically just going to screw up the market more than it is. We did this back in 2010. Go look, you can see we had a lot of a huge demand, and then it fell off a cliff. Just go look at the chart. Same thing. Right at the gate, boom, hit it. What we need is rate cuts and lower rates. Not 2s, 3s, probably not even 4s right now. We just need a conventional rate with a 6%. Just six, guys. That's nothing. We need commercial rates to be in the high 4s and the 5s to start making things work. If you want sellers to sell, which they are, many sellers every day, every week, every month are getting rid of those 1%, 2%, 3% rates, right? The average rate's what, 3.75 across the board? That's the problem. But sellers are selling and going to be buy-up buyers and getting rid of those rates. It's just happening across the board. Maybe you're watching this going, there's no way, Kenny, that's impossible. It is. It's happening every day. We're doing deals. Other people are doing deals. It's happening. Why? Because people's reasons to sell outweigh the reasons to have this low rate, low payment. It could be divorce, death, partner breakup, job loss to move. It could be a many things, right, guys? So there is a reason, but I just don't want to see the government come out with programs where we're going to screw up a housing market that's already screwed up. Do they not understand? We are in a recession because we don't have inventory. So how does giving $10,000 to a first-time home buyer get more inventory? Do you know why we did it in 2010? Because we had too much supply, not enough demand. That encouraged demand. That's when you do it. You do the $10,000 credit when we have too much supply, not enough demand, and we need some demand. That's when you do it, folks. Welcome back to another episode, another week. That was my rant. It wasn't so long. I tried to shorten it up. It wasn't bad, right? It wasn't terrible. But you know, I want to top and take a moment of silence and appreciation for Big Mouth Pal. Big Mouth Pal, we want to thank you so much for becoming more reasonable, to starting to see the light at the end of the tunnel, to starting to maybe put down your landing gear, to maybe think about landing the plane, to recognizing that you are going to cut rates, to recognizing that maybe it's time, to becoming more dovish, which we're going to call just becoming more wise and intelligent to what the data really means is inflation was here and we're literally down here. This is how we are, guys. We have come this much. So Mr. Powell, I think we're doing okay. I think if you rate cut, I don't think you're going to regret that decision. Even if something did happen, I think we'll do just fine and we'll get through it. Because you know, and I know, outside of 1 to 4 residential mortgage rates, outside of business debt, credit card debt, home equity lines of credit, commercial rates, the commercial market's deteriorating at a rapid pace, you have a thing called $17 trillion that needs to be refinanced. And that is really where the problem lies. Because if we don't address that, or when we address that, just to refinance that debt load is going to cost us in monthly and yearly, what is it, $1 trillion to fund that? Is that what it is? I mean, should we just take a look? I mean, I don't even know what the rate is here. I'm going to go on the handy dandy calculator live on the brief, folks. And yes, by the way, if you want to know your calculator, if you switch it sideways, you can go longer numbers if you guys didn't know. So 17 trillion. I can even add up the number. We've got billion, trillion. Oh, wow. Let's see. 1,000, 100 million, 100 billion. Did I do that right? Let's see. Okay, 170,000, 1.7 million, 17 million, 170 million, 1.7 billion, 17 billion, 170 million. I think this is it. Times 5.5% equals $1 trillion at 5.5%. If that's what they refi, it is $1 trillion, folks, that has to come out of our annual budget. And by the way, the 1 trillion just slice off of a 4.4 trillion. That's what we make. So 4.4, now we're down to 3.4 trillion. And let me just tell you, 3.4 trillion ain't gonna pay the bills. So we will have a problem. So he has a massive problem that he has to solve quickly. If not, oh, we're just gonna tax people to pay this crazy interest. I don't think that is gonna happen. But anyways, welcome back to The Brief. It's another episode, another week with your one and only Kenny Simpson. If it's your first time here, welcome, welcome. Sorry if I scared you in the beginning there. I promise it only gets funner as you watch. But if this is your 10th, 20th, 30th, I don't know how many times I've done this, I should probably count 100 time back. I think I've probably done this 100 times, maybe more. Welcome back, and thanks for continuing to listen. And I will try to bring some entertainment. I will try to provide some data and some intelligence and some wisdom, and we will try to solve some problems here, folks, because today we're definitely going to go with some interesting stuff. But before I get into that, if for you first-time watchers, listeners, my name I mentioned is Kenny Simpson. If I can help you, please reach out. I focus on 1 to 4 unit financing. That's my pitch. I'm moving on. So what we always get into, whatever we get into, everybody, is inventory. How are we looking nationally? Last week, 507,000 and change. This week, I have good, exciting news. 512,759. We're going up. We went up 7,000. We're going up about 5 or 6,000. We are making moves. We are adding inventory. Unfortunately, that's nationally, because here in San Diego, Ron Burgundy, new listings is 540,000. Listings sold 385, and all listings 2,994. New listings is an even. Listings sold is not very good. It's about an even. And then all new listings were only up like 50. So not great, guys. Here in San Diego, we're getting punished. That $10,000 first time buyer, that is not what we need here. We do not need that here. Stop, whatever you say. Do not give us that. It's going to be a problem. So look, we have a dovish Fed. Let's go over the week. How are interest rates? What's going on? We have a dovish Fed now. Will they remain dovish? We have more Fed officials talking this week. Boy, they scare me. They make me nervous because they start saying all this stuff. But we know where Jerome Powell stands, even if they're all over the place. We know he's dovish. We know he's going to cut. He says 3 times at 25 basis points each. Is it 51, 25, 1, 75? We don't know. He's going to probably cut from 75 to 150 basis points. We're just making guesses. So we like what he said. Talked about a lot of different things. Not going to get into it here. But look, we're liking his tone. We're liking his messaging. And we're going to keep eyeing our prize on a June cut. Would it come sooner? I don't think so, but you never know. What happens when what happens when a rate cut comes? The good news is I will come on here. We'll have a party. We'll have a celebration. Maybe I'll give you a toast. I don't really know what we'll do. Maybe I'll dance for you guys. I just don't know. But what I do know is that the conversation is going to change. We're not going to sit here and wonder, is he going to hike? Is he going to cut this? It will go from he cut. Now, what does that mean psychologically from the 2 years here and here for everybody? It's huge because now we can start coming down the mountain. Is he going to cut 1 more, 2 or 3? It doesn't matter. He did the cut. He's officially pivoted at that point, the biggest pivot of all. When he went from buying treasuries, cutting rates to stop cutting rates, that's not a pivot. When he went from that's a pivot. But I'm talking the big pivots. The big pivots are, I'm hiking rates. First hike, huge pivot, even though he keeps going. Stopped hiking, it's a pivot, but it's not the big pivot. The big monumental pivot is, boom, done, finito. We're done cutting. We're done hiking officially. We're done talking about it. Now we're going to cut rates. Could they ever raise rates again in the future? Absolutely. Things change, folks. We're in a fluid economy. We're in a moving economy. We don't know. But what we do know is inflation has come down. Job market's a little unstable. The economy, is it good? I don't know. If the government stopped putting all this money into all this stuff, we wouldn't know. We do know that the construction industry is booming, but a lot of the multifamily stuff's going to come to an end, and that's about 1 million construction workers who will lose their job. That's a big number. So could we have a job loss recession? Absolutely. So we do know things get hit. What does all this mean? All these things that we're all talking about, we care in real estate because it affects interest rates. What affects the economy, good or bad, affects interest rates. If we get a bad jobs report, rates go down. If we get a good, rates go up. If we get bad CPI, PCE, PPI, man, those are tough. If we get bad, rates go down. We get good, rates go up. If we get a hawkish Fed, not good for rates. We get a dovish Fed, good for rates. We get a rate cut, good for rates. See what I'm saying? Are people already building in the rate cut? Sure. I'm sure they are. So anyways, so you're a first-time home buyer. Your son, your daughter calls you up and says, hey mom, hey dad, I want to buy this house, this condo, this 2 to 4 unit, and I need your help. I don't need you to co-sign. I need a gift from you. I need you to help me with the down payment. So you immediately go, sure son, or no son, or sure daughter, or no daughter, right? You can call grandma, your brother, your uncle, your cousin, whatever. You call family, you ask them for a gift. My suggestion, if you're asking for a gift, a couple things. Number one, make sure you've already talked to a lender. You already know what you're pre-approved for. You already have seen the numbers, the down payment, the closing cost. You have an idea if you're going to buy a house, a house, a condo, or a 2 to 4 unit. That's number one. Number two, make sure you understand what is your payment. How much money is it going to be for the closing costs? How much money is it going to need to put down? How much money are you going to have for this transaction? And number three, when you go and ask the parents for a gift, you want to have your stuff together. Because I've been doing this a long time. Having your ducks in a row really, really helps. Tell mom and dad that you've got pre-approved, you know what you want to buy, and you're asking for a gift, but here's all the paperwork, here's the payment, here's this. And that's how you sell them. Because you are selling your parents on believing in you and believing in you to buy a house and do the gift and the whole thing, right? So get your shit together before you sit down and talk to your parents, because guess what? I talk to parents and they want to know all this stuff, and when you don't have it, they're like, well, what am I even giving them? We don't even know the numbers. How do I know if they can afford this? What are we doing? That's what you want to do. If you're a parent and your son, your daughter calls you and says, mom and dad, aunt and uncle, grandma, grandpa, whoever you are, I want you to gift me funds for my down payment, and they have all their stuff together, and you say, sure, you're going to give them 50 grand, 20 grand, 10 grand, 100 grand, 200 grand, 500 grand, $1 million, whatever it is. Do you know how you're going to give that to them? Did you call your CPA? Did you call your financial advisor? Did you call your attorney? I don't know. Who do you call? How do you do this? Well, let's dive in to the proper way to gift. In 2024, the gift that you can give somebody, a family member, is up to $18,000 per recipient. With married couples, you can gift up to $36,000. Number one. But wait, you're saying, Kenny, I said I wanted to gift $100,000. Let me get to that. Gifting for a home down payment requires understanding IRS rules, considering the donor's financial situation and impact on real estate planning. There are specific tax considerations and reporting required for gift exceeding the annual exclusion amount. So let's say that mom and dad are willing to gift you your money. Cool. One thing you could do is you have a husband and a wife, and the husband and wife go to both parents and they both give them, remember, they're married, $36,000 each. That equals $72,000. That might cover your scenario. If you're saying, hey, Kenny, I need to get gifted $250,000. My mom and dad don't know how to do that. Do you have any suggestions? Well, sure. Number one, they should definitely be calling their CPA right away. I would probably, if you have a financial advisor, get them both involved just to make sure what accounts, where you're going to come from. Is it coming from your IRA, your 401k, your stocks, your savings, your checking, annuity, life insurance plan? Look, I'm listing stuff. You might go, Kenny, we're not going to take care of there. But call your CPA, call your financial advisor, number one. Number two, you also know that lifetime gift and estate tax exemptions. Let's read about it. The current U.S. transfer tax rules allow each individual to make lifetime gifts and request at the death up to basic exclusion amount. Without gift or estate tax in 2024, these amounts are set at a whopping $13,000,000.61. So if you want to give $1 million, $500,000, $300,000, what you would do over that, your CPA would most likely, your financial advisor or some type of tax attorney was probably going to say, hey, we're going to have to give it towards the lifetime gift, that exemption. We have clients do it all the time. That is one way you could do that. If you make a gift that is larger than the annual exclusion, you are required to report the gift by filing IRS Form 709 at the same time your individual tax return, even if you will not owe gift taxes on the gift because you have not used up your 13.61 million lifetime exemption. You're still required to file the Form 709. The IRS will use your 409 to track your total gifts to your lifetime. If your gifts eventually reach the lifetime exemption limit, you would then be required to pay gift taxes on gifts greater than that exclusion. So let me give you the best way to now gift your child the money. Are you going to give your child a bag of cash? Are you going to wire the funds into your daughter or your son's account? Are you going to, number 3, wire the money into escrow? Ding, 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 ding. Yes. And why do you want to do that? Number 1, we're not going to take a bag of cash you just got deposited your daughter's account or your son's account. Number 2, we really don't want the extra paperwork, and most parents don't want to send me a copy of their bank statement. They go, this is my information. Why do you need it? Well, you gifted it, sir, from your account to their account, and I need it. But if you just simply send it into escrow and you fill out that nice gift letter that you gave your son, Bobby, Robbie, Tommy, Kenny, whatever, $1 million, and you wired an escrow, we don't need anything else from you besides the letter and money in escrow. And that, my parents, my friends, my listeners, is the way to gift funds. That's how the IRS is going to look at it. And if you want more information on this, do not call me. Call your CPA, your financial planner, or a tax accountant, attorney, whatever you may call it. But if you are looking to get pre-qualified and talk more about gifting, can you get qualified and all that, obviously reach out to me. Love to help you out, love to chat and learn more about you and your scenario and how we can help. All right, folks, in this article, I almost made a $14,000 home buying mistake. What I learned about mortgage points and fine print. Let's go to the article. This lovely couple bought their first home in 2022 during the hot summer seller's market. It was smooth sailing until it wasn't. We trusted recommendations from friends and family for our mortgage lender and real estate agent. We asked dozens of questions. How does the home buying process work? How much are we approved for? How much is a monthly payment? And finally, how much money do we need for closing costs? Based on the home's price, 30-year fixed rate, we budgeted to $18,000 in closing costs. Home buyers generally estimate anywhere from 1 to 6% of the total annual loan amount. Less than a week before our big day, our paperwork said we would need to bring in nearly $25,000 to close. In addition to our down payment, that's when we noticed we owe $13,920 in discount points, which were folded into loan costs. We were stunned. Along the way, our mortgage lender had mentioned discount points, but we hadn't realized that discount meant we were buying the lower interest rate and we'd have to pay more money at closing. What was the lesson learned in this? Let's see here. Let's go through what questions you should ask and how to avoid this to put yourself in a bad situation. Number 1, what is the loan amount? Number 2, what is the rate? Number 3, check out the payment, PITIMIHOA, whatever it is. Number 4, does this rate include points, buy down points, discount points? If so, how many points and who's getting what? Also, is this fixed or adjustable rate mortgage? And finally, what are the total closing cost fees and how much is it do I have to come in with? That is the number, folks, you want to know before you buy a house. What could change? Prepaid interest, rates and fees, because rates change daily. What else could change? Depending on what title and escrow you go to, their fees are all the same. So if you get something locked in though and the rates change, the loan officer should be able to describe that to you. So just make sure you get all the documentation up front, you get your questions answered. If you are in the middle of a refi or a purchase and you did notice maybe there's some fee you don't like or you're not sure if you get a good deal, you can go ahead and send me your loan estimate. I'd love to do a free LE review and tell you if you are getting a good deal. And last but not least, folks, you have the right to shop and go to different lenders, banks, credit unions, mortgage brokers, whatever you want, and make sure you're getting a good deal for you and your family. And just to mention the NAR lawsuit. So for you first-time home buyers, you might be freaking out going, what does this mean for me? I don't really understand this. So does that mean I have to pay the buyer's agent? The seller's going to pay them? I have to pay higher? I can negotiate? Look, we don't know how the laws are, but it's simple. If you're a buyer and you're going to buy a property, Yes, you have to get in a contract with a buyer's agent, or you can have the seller's agent represent you. Yes, you can negotiate, and you've always been able to negotiate your commissions. And 3 is yes, you could possibly have to pay out of your pocket now because that listing agent or that seller said we are not going to pay for your closing costs or pay commissions. My seller has too many offers and you might have to do that. So what does that look like? Has anybody else been doing this? In the state of Washington, they've been doing this. And as I read this article from Housing Wire, starting January 2024, they started doing introduction to buyer agency agreements in Washington. This law mandates clear communication between the agent and the buyer regarding the scope of services, compensation, aligning with the practices already established for the seller agreements. The change in Washington, they just became proactive of what the NAR lawsuit was, and they figured we were going in this direction. Buyer broker agreements in Washington can vary in duration, exclusivity, allowing agents to tailor contracts to fit individual client needs. Enforcement and compliance. The state ensures that compliance to the system of checks at the firm and state levels, including audits by the Department of Licensing, that agents understand that the importance of these agreements as commissions are contingent upon having a signed agreement in place before any transaction. While real estate professionals in Washington view buyer broker agreements as beneficial for both parties, offering clarity and professionalism, the CFA warns that these agreements might contain provisions favoring agents and brokers at the expense of consumers, highlighting the need for careful contract review. So folks, this is going to be the new norm. It's happening in Washington, but they're also saying just because you have this agreement doesn't mean you might be locking yourself. So if you're a buyer, you should make sure you're reading this. They should be going through the contract. What are you getting locked into? How long is the contract? Is there flexibility? Make sure you're getting your question answered. So a lot of people are going to get locked into contracts, which I think is better for both you and the buyer's agent. Because look, no buyer's agent wants you running around talking to 5 different agents and looking at a house without 500 people. That's not cool. To them, it's unprofessional. And why does somebody really want to help you? They want to lock you in, yes, and I hope that that's scary, and make you commit to them, but they should also be giving you terms that are flexible, working with you, the commissions, all that needed. I think at the end of the day, this will be a win-win. It'll work out. It's just change always sucks. It's not fun, but it's needed. And obviously the industry, the market, US is speaking, they want change. Whether you agree with it or not, we're just going to have to move forward and live with it. And folks, that is wrapping up the brief. Yes. Throwing in some different nuggets, throwing in some information about the housing market, what's changing. Look, I'm getting a lot of information from clients. How do I gift, right? What's going on in the housing market? How are we going to do the NAR laws? What to look for if you're a first-time home buyer or you're just in general, like about checking the information on the loan quote, things like that. If you've never read one, you have questions about the stuff, reach out to me. I'm here to help. Thanks for watching. Until next week, we'll continue to watch the news, the data, the rates, and all that good stuff. And I look forward to seeing you guys and talking to you very, very soon. Brokers at the expense of consumers, highlighting the need for careful contract review. So folks, this is going to be the new norm. It's happening in Washington, but they're also saying just because you have this agreement doesn't mean you might be locking yourself. So if you're a buyer, you should make sure you're reading this. They should be going through the contract. What are you getting locked into? How long is the contract? Is there flexibility? Make sure you're getting your question answered. So a lot of people are going to get locked into contracts, which I think is better for both you and the buyer's agent. Because look, no buyer's agent wants you running around talking to 5 different agents and looking at a house without 500 people. That's not cool. To them, it's unprofessional. And why does somebody really want to help you? They want to lock you in, yes, and I hope that that's scary, and make you commit to them, but they should also be giving you terms that are flexible, working with you, the commissions, all that needed. I think at the end of the day, this will be a win-win. It'll work out. It's just change always sucks. It's not fun, but it's needed. And obviously the industry, the market, US is speaking, they want change. Whether you agree with it or not, we're just going to have to move forward and live with it. And folks, that is wrapping up the brief. Yes. Throwing in some different nuggets, throwing in some information about the housing market, what's changing. Look, I'm getting a lot of information from clients. How do I gift, right? What's going on in the housing market? How are we going to do the NAR laws? What to look for if you're a first-time home buyer or you're just in general, like about checking the information on the loan quote, things like that. If you've never read one, you have questions about the stuff, reach out to me. I'm here to help. Thanks for watching. Until next week, we'll continue to watch the news, the data, the rates, and all that good stuff. And I look forward to seeing you guys and talking to you very, very soon.